So here's the joke, right? The joke is like, who would have thought that the like killer use case for blockchain was money?
Yeah.
Right? Like that's what stablecoins are. Stablecoins are like the admission that the actual best use of this technology is in fact money.
This is Cash Tips, real conversations with the people building the future of finance, a Polygon and Boys Club production.
We're here with John Egan, Chief Product Officer at Polygon Labs, former head of crypto at Stripe, product lead at Meta before that, YC alum, very impressive resume you've got here, and super excited to talk with you about Polygon and the open money stack.
Appreciate it. Excited to be here.
Okay, so tell us about Polygon's vision for the open money stack.
Yeah, so this is really exciting. Mark and Sandeep put out kind of the initial vision back in, I want to say January or February of this year. And it's really an expansion of Polygon's goals, right? So everyone sort of knows Polygon as the chain, this like early stage, scaling layer for Ethereum. We were really successful at that back in the bad old days when regular like layer ones were doing, like 12 TPS, right? We had to scale that aggressively. These days the chain, it's up to like 5,000 TPS, which pushes up against, what Visa and MasterCard do anyway. Now, it's not really the story anymore. The story is how do we move all money on chain? Because it's one thing to have kind of a closed ecosystem, a separate ecosystem from like the fiat world. It's a very different thing to actually migrate the fiat world on. So the open money stack is really our vision for how we execute against that mission. Right? You can't just bring all money on chain by having a place for it to go. You have to provide the full stack of capabilities. And that means sort of at the base layer, the chain itself, the settlement layer. One layer above that, you need a payments network. How are you going to connect the chain to the fiat world? And that's like a regulated layer. So how do you go move money from your bank account on chain? There's a layer above that, which is all about like financial services. So, okay, how do you store that money in a wallet? How do you get yield from that money? How do you move that money between chains? There's a layer there. And then at the top, there's sort of a UX layer, which is now how do you go interact with all this stuff? And that can mean sort of how do you manage your treasury directly if you're a company, or how do you just sort of manage virtual accounts and ramps and orchestration between all these other layers and services? And so the open money stack is a consolidated vision. It's a singular API. It's a single UX that lets any company move and store money at will, on or off chain. And we provide that as a directly integratable system. So you don't have to go 7 places. We like to think about it as if you wanted to like vibe code a neobank, in 30 minutes, the open money stack will let you do that because a neobank takes all of those different layers in order to work successfully. I'm sorry, I keep like whacking the mic.
The mic stands are weak. It's just, you're a little taller than most of our guests.
It's okay.
Put it up here.
Yeah, most of our guests.
I'm entirely Italian on my mom's side, and I can't stop doing this. I have to like sit on my hands.
A lot of the guests, their like feet dangle, and so I'm like, we got a tall guy here, no problem.
I heard someone say there's a theory in crypto, like the average height is
tall.
higher.
It's high.
If you go to like crypto events,
really,
people are like unusually tall. You're tall.
That's
like,
funny. I am tall.
People are unusually tall.
Wow, that's funny.
And so I go and I'm used to sort of looking up people's noses, and you go to like crypto events, and it's all kind of eye level. It's really cool.
There needs to be a study around what draws people, tall people to crypto.
I feel like it.
Okay, so open money stack, the vision sort of was rolled out in January. I think the response was really great. A lot of people understood the need for this fully integrated stack that was coming from a sort of storied in crypto blockchain like Polygon. What, for all the people who have sort of seen that announcement in January, what actually works today that didn't exist then? Or what's integrated today that didn't exist?
So how far have we gone along the roadmap?
Yeah, exactly.
Like bringing this larger vision. Yeah, so we just announced technical preview earlier this week. And technical preview comes with kind of the base capabilities for the OMS. So number one, it comes with regulated ramps, primarily in the US. So if you're operating for banks, so if you're operating a business and you're relying on movement from money stored in a bank account today, and you need to get that money on chain, it's still hard. You'd think this space would have been solved by now. We've had a lot of kind of players in it. The reality is the kind of onboarding, the KYB process, the ability to handle large volumes, still a major barrier. So first and foremost, regulated bank ramps, live already. Second is custodial wallets. Okay. So storing that money that you've brought on chain before you maybe disperse it or otherwise, live already on the OMS today. And then on the kind of back end, we call it orchestration, which is what is the intent system for defining where that money is going to go to.
Okay.
So being able to not just say, hey, I want to ramp some money, but hey, I want to start with a bank account and I want to end with, crypto on Tron.
Okay.
At the end point. How do you orchestrate through?
Okay.
So all these capabilities, and we kind of call that distribution, kind of on the far end. Like, how does the money, sort of end up in the right place?
Okay.
All of those things live. And the feature level, we kind of call those virtual accounts, which is banks onto crypto. We call that deposit addresses, which is the development of a blockchain address that then distributes out into fiat if you want to go the other way, and then the wallet side.
Okay. A lot. We got a lot here, which is great to hear. Are you seeing from partners and customers a priority around that, an area where they have the biggest questions? Like, what are you seeing as you're actually having these conversations?
Yeah, lots of questions about sort of how you link these things together.
Okay.
Right? Because today, the world looks very much like a bunch of different service providers offering these capabilities, right? So maybe you go to Fireblocks to get your wallet. Maybe you go to Bridge to get your ramp, right? And then you've got to connect these two things together. And in a regulated world, the hard part about that is really the KYB process.
Yeah.
So how do you sort of prove that you're allowed to move this money around, who you are, so that you stay on the right side of regulation, especially if you're operating in the US.
Yeah.
That's actually quite hard. You have to store that KYB information in one place for one service provider, then you've got to translate it and move it to the other place. And the reality of the way the regulations are written is no one really wants to share this information. Right? You give your data to one service provider, they don't really want to transmit it to another. And even if they do, the other side says, well, we don't really know where this came from. We don't trust this other provider. So a big part of this that people are asking us for is just the consolidation layer, which is KYB once, move money forever. And if you can do those two things, you really unlock a lot of capabilities for remittance companies, for example, who spend a lot of their time just doing the orchestration and wiring up between these different service providers.
Yeah, there's like a insane efficiency that happens when all those little like ands and buts in between get removed, kind of.
That's right.
Okay. Great. So
I can give you sort of an example. If you're like a company like a Flutterwave, who uses Polygon for payouts.
Okay.
Flutterwave is sort of like the Stripe of Africa, right? So for them to be able to operate successfully, right, they need that kind of endpoint, which is users who want to receive dollars on chain, and they use Polygon for that today. In the future, they can also use kind of the ramp side and only have to KYB once as a business.
Wow. Okay. That's awesome. Okay. So Polygon acquired CoinMe and Sequence earlier this year. CoinMe comes with money transmitter licenses in 48 states, plus tens of thousands of physical cash locations. You were sort of talking about that licensing earlier. Sequence brought wallet infrastructure, cross-chain routing to the table. My understanding of this is that someone could walk into a grocery store with a $20 bill and walk out with USDC. Okay, great. I'm glad I'm tracking. So who is that person, and why does Polygon want to own the most analog part of the stack?
So the cash ramp side of this always gets a lot of engagement when we're talking to users about it.
Sure.
I think it's really unique. And I think it's very close to kind of the ethos of blockchain, right? In its earliest phase. We think of it as cash.
Yeah.
We really think of it as digital cash. It's funny, we don't really think about bank accounts as digital cash, but we really think about crypto as digital cash. And so the translation layer makes more sense. You expect to be able to walk in with $20 and come out with $20 in USDC or Tether or otherwise.
Yeah.
And so through the acquisition of CoinMe, we have access to about 50,000 locations in the US. I think Walgreens, I think soon CVS, a couple of other places that would just be across the street. In fact, if you opened up the app today and you kind of looked, you'd probably find one right nearby.
Wow.
And so the customer for that tends to be sort of your average consumer money mover.
Okay.
Right. So certainly if you're like a corporation managing your treasury, you're probably not walking into Walgreens with a bag full of cash to do your money movement. But if you're trying to send money home, if you're an immigrant to the US and you're trying to get money back home to Africa or Latin America or anywhere else, it's likely that your family in those countries is capable of receiving stablecoins and then using them locally, because there's deep liquidity, especially on Polygon in these regions. Latin America is a great example, right? Latin America is 55% of all stablecoin usage, and it's 75% on Polygon.
Okay.
So if you're sending USDT on Polygon to Latin America, it's usable.
Yeah.
It's not okay, now I've got another problem. How do I get it out of there?
Totally.
But you do have a problem in the US, which is great. How do you get that money there? And so your options today are very, kind of old fashioned. It's what do you have? Western Union, which has a whole fee structure around it, is pretty complicated to use, and quite frankly requires additional hops and complications. But if you could just walk into a Walgreens, with the money that you have that you need to send home for food, for rent, for whatever. It's a very viable pathway for, your average worker who maybe doesn't want to drive to the local Western Union, doesn't want to go through those hoops, doesn't want to, fill out. Have you ever done Western Union, by the way?
No, there's a MoneyGram. Oh, actually, no, I have done it. There's one in Greenpoint, and I did it one time. I can't remember. It was like a weird thing for like a deposit on an apartment or something.
It's
like so
super
random.
strange, right?
Yeah.
Like, and the way they do it, I don't know how the location you did it, but like when I've seen it done is they run the whole thing on those receipt printers.
Yes.
Right? It's like, okay, it's like getting,
so
remember
analog.
the old memes about CVS receipts where they're like, you can make a raincoat out of them because you get so many. That's what it's like trying to move money on these systems.
Totally.
You walk in, you say, hey, I'm going to send some money like to Brazil. And they say, great, no problem. And then they print like, 15 meters worth of
with
receipt.
like,
And you're supposed to read it.
The little things at the top, I feel like. Maybe I'm just imagining that. But when you have like it's perforated in some way. Yeah.
And you're supposed to read it and you're supposed to sign it.
Insane.
And then they fold it up and staple it and keep a copy. And then they print another one. And then you're supposed to store that somewhere. Like
So
this
wild.
whole process is insane.
Yeah.
And so the idea that you could just go to an app, tell it, hey, I'm going to go drop $20 off. And I need that to come back to my app, right? As like Tether. And then I can finish that process. Then I can walk away. And then outside of that transaction of on-ramping, I can then send that money home at will, keep some of it for myself, use some of it later, pay my friends with it. You kind of get that magic of once the money's on chain, you can do anything with it. And so I think especially for cross-border money movement, it's a really great use case. And then really anyone else who's trying to like make the money productive. Maybe you don't have a bank account, but you want to generate yield on the money that you're saving. That's pretty complicated. Cash doesn't generate yield. If anything, it gets less valuable every day. If you on-ramp that money as like an individual at a Walgreens, you can then move it towards DeFi. Bring it to Katana or something, and you can start to make yield on it very quickly. So I think like those are two really kind of common examples I think we see of cash. I think we'll see more of it, in the future. We've got sort of a new generation coming up that uses debit cards more, does actually engage with cash again in a way that maybe millennials kind of stopped doing.
Yeah.
So I think there's sort of this kind of like wave that comes and goes. And we're definitely seeing that increase again.
Yeah, it's so interesting because, working in tech and sort of seeing I'm like, we're having conversations around like AGI, but like there's so much of the world that is so old school. And I feel like an area where I see it most clearly is in money and in payments.
Yes.
And I feel like you can feel really removed from that when you're, using Apple Pay or whatever it may be. But then there's these moments where I'm sure on like the business to business side, you're feeling that every day. And then there's like very cute moments as a consumer where you're like, oh wait, like my friend who lives in like Portugal, I like cannot figure out how to pay them for this dinner that we just had.
That's right.
And there's those moments where you're sort of brought back to, okay, we've got like a lot of things that we got to do to get to a future that we're all sort of like talking about. And I think Polygon is like really thinking about it in this very smart way around both for businesses and for consumers as well.
Money's everywhere. And like the constraining factor has been that money's not really code. Like this is why code was so successful. The internet was so successful at like making information free, is the flexibility of that code layer lets you sort of mutate it to be whatever you need it to be and have that creativity. We've just never had that with money. And I think we've been carrying this flag in blockchain for a long time. Like, well, blockchain is that
beating our
programmable
chest
money.
about it. Yeah,
that's right. But what's been missing has been the interconnectivity of that sort of programmable layer with everything else, which is where the money already is. You and I, our money's probably mostly in the bank.
Yeah.
And it should be easy to get it on chain. And once it's on chain, then it's sort of free. And I think AI, I think we'll talk about it later, but like is one of the core kind of use cases for cash in the same way that it is for sort of individuals, who are operating without bank accounts.
Yeah. Okay, I want to talk about stablecoins. Stablecoin payments went from sort of this like contrarian take a few years ago to very much the consensus as of this year, I feel. Tempo, Circle, everyone's pivoting to like payments, RWAs. It's like all the things that I'm hearing at every conference I'm going to. So you're 9 months in at Polygon. What have you learned about payments, about these new sort of payments, RWAs, things that everybody's talking about, stablecoins, that maybe these new people who are just entering the space don't know?
I mean, okay, so here's the joke, right? The joke is like, who would have thought that, the like killer use case for blockchain was money?
Yeah.
Right? Like that's what stablecoins are. Stablecoins are like the admission that the actual best use of this technology is in fact money. And the reality is we already have a concept mentally of what money is, right? Money is tied to fiat values.
Yeah.
And stablecoins, I think, were this very simple idea that was, and it's funny because stablecoins came they didn't come at the beginning of the RWA. Like people started with things like property.
Right.
Remember that? It was like, let's go buy property in Montana. That was like part one. Because
like Doge. That was another.
Because we wanted it, not that we wanted it to be complicated, but we really wanted to lever all the flexibility of what the blockchain was.
Yeah.
But similar to how NFTs kind of turned out to work as a method of showing ownership. I think stable coins are just this very practical thing that people can understand. It's the dollar you've already got, but it's on chain and now it's better.
Yeah.
It's like an easy story to tell. Not like it's land, you don't really understand land. Let's talk about how land works. Let's talk about deeds and ownership. Let's talk about title search and title insurance.
Yeah.
So what's the Y Combinator joke, right? Make something people want.
Yeah.
I think the reality is people wanted money on chain and always have. And stable coins were the very kind of clear way to do that. And we'll probably see evolutions of stable coins, productive stable coins, investable stable coins. But for now, you go talk to someone who's not in crypto, and the idea of stablecoins is very approachable.
Yeah.
And approachability when you're trying to do things like bring large organizations on chain is important. Approachability when you're trying to bring people who, maybe aren't excited about the technology, on chain is really important.
Yeah.
So you could say it's no surprise it worked out, but it did feel like when it was happening, and I remember I was at Stripe, while it was kind of starting to take hold, this sort of shift away from maybe you'd on-ramp to Bitcoin to maybe you'd on-ramp to stablecoins. It kind of happened quietly. I remember going to I think it was an ETHCC conference, and all anyone talked about at coffee shops was stablecoins.
Okay.
But it wasn't on stage at all. Wasn't the thing that we were talking about publicly yet. And so, that's always the sign of something that's good. Right. It wasn't pressed into existence.
Right.
It kind of very organically grew in popularity. And that's the best kind of thing, right? Because it'll continue to grow, no matter what. And it has continued to grow. So, when you kind of look at it through that lens, clearly, stablecoins are going to be the most interesting thing for a while.
Yeah.
Great. What do people not know? What was the question about?
Yeah, the new incumbents who are kind of starting to get their feet wet.
Yeah.
What are some of the things, either mistakes sounds really negative, but some of the surprising things that they'll find?
Yeah, so if you're coming into this space, especially if you're building a company in this space, I think the most common mistake I see is that there's always been this divide between people in sort of TradFi and DeFi. And they have a very strange perception of each other. If you're in crypto, you probably perceive the banking world as particularly orderly, well buttoned up,
Yes, totally.
like very well controlled, predictable, and you sort of think of them as, oh, well, we're code is law. But they're probably contract is law, and everything written down things are law, and law,
they're imagining
law is law.
Western Union.
That's right. That's right. They're
ways,
imagining sort of what they've seen in movies.
Yeah,
For
totally.
what is a banker? And then similarly, people in TradFi, sort of perceive crypto folks as just cowboys.
Yes.
In the extreme sense, kind of in the sort of comical version, of the cowboy, and that we will make things more risk forward than they need to be, and we'll do silly things just because why wouldn't we, get the 6 shooters out.
Yeah.
I think that perception prevents a lot of integration between these two systems.
Yeah.
Because the reality is people who work in TradFi are interested in exploring new opportunities for money and finding new ways to make things work and, enabling access to parts of the stack that they control. And it's true that people in crypto are looking for ways to interact honestly with the regulated system, right? Versus trying to cheat their way into it or hack their way into it. And the companies that don't figure that out never really make the bridge between the two. And by failing to do that, they just never achieve the scale of the goal that they're trying to reach. They'll find some ways to move a little bit of money or bring a small part of their business on chain. But the people who really do a good job of merging the two understand that you can safely store large sums of money on chain without taking large risk, right? And similarly, you can rely on TradFi parts of the stack for money movement without giving up everything about your ethos for how you think money ought to be on chain or otherwise. So, it's rare that the great opportunities are in the blurry middle between two industries.
Yeah.
But I think that's really where it is here. And the people who I see succeeding in the space, when I was at Stripe, Bridge was an example, are the ones who are willing to kind of reach across the aisle.
Yeah.
And Polygon, I think, is incredibly well positioned for this because we have the existing commercial relationships. Just from being in the space for so long, we've got probably the best BD team in the business. And we've been working with people from a chain standpoint for so long.
Yeah.
So it's hard to do. It's easy to explain. It's like, oh, just reach across the aisle, do both. But it's actually very difficult for people, both who are service providers building in the space and for like companies who want to take advantage of those service providers to kind of get in the correct mental state.
Yeah, I think it's really interesting you talking about sort of, it's funny that the product market fit of crypto is money. Yeah. And part of that being how that's translatable and how it's understandable to anybody. And when I think about institutions, large organizations, so much of working at a big company is operationalizing and communicating. And that is, I would say, 60%, 70% of people's job is just like, here's information that we're doing. Here's how we're communicating that information. Now go operationalize that. And if you have something that people can clearly understand how powerful that is. And so it's actually such a bull case for crypto that this thing has become really simplified into like, this is money. And people can be like, oh, okay, I get that. And how much that will, I think, exponentially, very quickly move a lot of these organizations on chain in a powerful way.
100%. It's very hard to explain what a blockchain is.
Very tough.
To someone who doesn't think about it. It's very easy to say, wouldn't it be cool if your money was global?
Yeah.
Wouldn't it be cool if you could build a neobank in an afternoon? Wouldn't it be cool? You know, these are things that I think can take root as like memes. If you've worked in like large corporations before, like the concept of a meme internally is actually really important.
Yes.
Like generating this basic meme around capability for the thing you're trying to champion is what stablecoins really give.
Yeah.
I think the blockchain space that it hasn't had before.
Yeah, absolutely. This is just an aside, but it was really funny the other day. I was checking out on Delta and booking a flight, and it gave me two options. It was like pay with miles or pay with what I thought said USDC. And I took a screenshot and I sent it to Dina, my co-founder, and I was like, whoa, like Delta on chain. She was like, what are you talking about? And I was like, USDC. And she was like, that just says USD. And I was like, wow, full brain rot. I'm like so in the stablecoin game that I was like, right. Okay.
What was
one
the
day we'll get
solution?
there.
Did they have like a cash? Did you like put $100 bills into the machine if you wanted to spend dollars?
I think that I was splitting the payment between my miles and like paying with my credit card.
Oh, just like oh, okay. So
Exactly.
you just showed that as dollars.
But
That's hilarious.
It was really funny that that my brain went there. Okay.
But wouldn't it be cool if like even if you were doing that with your credit card, right? Like stablecoins can represent in two ways, which is the other fun thing. They can be a front-facing consumer decision that you make.
Right.
Or you might pick USD, pay with a credit card, and then Delta might get that settled faster because Visa and MasterCard work with Polygon for like instant settlement. And because that settles faster, like Delta gets more free cash and opportunity, and hopefully your cost of a flight goes down.
Yeah, nice. I love that.
Yeah, isn't that cool how like you could be right. You could be like, this is USD.
It could be happening.
And in the back end, you actually are using some stable coins.
Yeah,
I think
totally.
that's like kind of cool.
Nice, I love that. Okay, so Polygon's vision docs, they're talking about AI agents moving money with no human intervention. Is agentic payment real volume you can see on chain today? Or is this kind of like dreaming, hoping? Where are we at?
It's so young.
Okay.
Like it's so incredibly young. The entire AI space is still pretty young. But like commerce on AI, it's like the internet in the 90s. You know, I'm sure we've got some Jeff Bezos character out there, you know, looking at AI with some incredible idea about like what the best consumer use case is going to be for commerce on AI. But today it's mostly experimentation.
Yeah.
And so, you know, Polygon, we like to be early. So we're the number one chain for X402. We're part of the X402 Foundation. I think we're like 90% of X402.
Wow.
You go pull up the charts. It's really cool. We didn't really start trying until like January.
Wow.
And so the charts are like no purple, no purple, no purple, purple. You know, just like flying through the whole thing. And so, you know, I think like it's important to be early, and it's important to work with the people who are just starting to figure out like what commerce means. I think the biggest barrier to kind of blockchain adoption in AI agents is that agents aren't really autonomous yet.
Right.
You know, like most people's experience with an agent is more like a chatbot experience, and it's like human in the loop stuff. And when you're human in the loop, you know, it's not a big jump to say, oh, I have to pull out my credit card, because that's what I would have done at you know, Amazon anyway. But where we're going towards, and I think OpenClaw was like an early indication of this, where we're going is that these agents start to operate independently. And we're starting to see it with search already. You know, when I need to go and find, say, the t-shirt I was going to buy on Amazon, like instead, what I'll probably do is human in the loop side, ask my agent, you know, I want to go buy a t-shirt.
Yeah.
Agent will go out and work with another agent that's a broker that will like find the cheapest t-shirt version, like with shipping that can get to you, or maybe it's next door if you need it tomorrow. What shop can you go to? Route you there. And then like there might be this kind of like Cambrian explosion of like other agents that like get notified and like go out and search. And like in that world, you need like rapid money movement because each like sub agent, you've got to pay for those kind of sub tokens.
Right.
And to do that, you need rapid settlement. It can't just be credit. You can't like distribute a credit card payment out to like 1,000 intermediary agents that all sort of rely on getting their like quarter of a penny in the way that sort of credit cards do today. You need like instant settlement so that these agents can kind of run and operate. That will probably cause like a step function in commerce, what we would call commerce, but agent to agent commerce.
Okay.
And when that happens, I would expect the transaction sort of count on agents to like rapidly exceed that from humans, just because now it's like code moving money around. It also is because agents like work best when they can unbundle transactions because you want all the sort of micro actions to be taken over by individually intelligent agents.
Yeah.
Right. And today most payments are sort of bundled. When you pay for something on Amazon, you're actually paying for a lot of things. You're paying for Amazon, you're paying for the shipping, you're paying for like the underlying SaaS services that Amazon is using. It's actually pretty inefficient, right? That you like make this payment and then there's like a business redistributing like costs monthly. Like you can imagine a world where that's all quite real time. And if that's all real time, you get competition at every layer from an agent standpoint, which is competition at the storefront, competition at the like discovery of a fulfillment center, competition at the shipping, everything kind of can get distributed and the amount of business opportunity it creates is greater. And if that's true, and you like 10x the amount of competition happening like at the business layer for every consumer transaction, then you get sort of this incredible explosion in the economy that's really positive.
Wow.
And so you can look at this through two lenses. One is, okay, that's actually really good for the idea of like new businesses and like new employment, which I think everyone kind of has a negative opinion on AI for right now. But you can also look at it for, okay, now there's 10x more transactions happening, right? And all of those transactions need to happen in a real-time settled way for those agents to really be functional.
Wow, cool. I really love that. There's like a vision for the future that you just described that is more jobs and things get cheaper. And I think that is a lot of what people are hoping will happen. And that the way you just laid it out, I'm like, oh, I can see that. I can see it in a way that I don't think you see on the timeline a lot. You see the other story a lot.
You can only see it on Twitter. And it's coming in ways that aren't even being kind of lifted yet.
Right.
I keep saying this, like build a neobank in 30 minutes. But there's an interesting question. Like if you can build your own neobank in 30 minutes, a lot of these other services you might historically go to, you might not need to anymore.
Right.
Because you get your own. You get one that's just for you.
Yeah.
Or maybe one of those companies will build it. But like regardless, like that kind of specialization is really what AI enables. And specialization equals greater economic opportunity.
And something that I feel like I'm hearing you say is it's not today, it's not right now, but at a certain point, it will be like everywhere, everything all at once.
Yes.
And so it makes perfect sense that as a company like Polygon, where you're thinking about this whole stack, you have to be preparing for that moment. And then when it happens, you'll be like the first one.
Our job is to enable that. Our job is to say, hey, you're starting a new remittance company. Great. Come talk to us, get an API key, and get on with it. Go build the best consumer experience you can build. Go meet people in places no one's thought of meeting you at yet. There are all these great remittance companies. Americans are like very unfamiliar with like remittance companies, but there are all these really cool ones. The one I'm aware of is like Felix Pago. It's an incredible method for moving money around. It's all on WhatsApp.
Wow.
Right? That was like their primary kind of discovery was that's where people were. They wanted to send money between two WhatsApp contacts because that's what their family was on and that's what they are on. And so the whole experience of the application is through WhatsApp. It's like a chat interface. Enabling like that kind of creativity is really what the Open Money Stack should do. Because otherwise what you're doing is you're showing up at a VC's office and you're telling them all the money you need to go and hunt vendors for all the different parts of this leg, right? Ramp the money on, do consumer KYC, store the money, make it productive, land it in a wallet somewhere, find an off-ramp, figure out a way to pay it if you want to hold on to it, like add security to it. What if they want to keep it on chain? All of these things require a lot of work and sort of take us away from that core piece of consumer product building, which is build the best experience.
Yeah.
And if we do that well, we should all be well served as consumers. We should all see this kind of like step function in consumer quality because that's where companies can really put their time.
Yeah. Okay, we are coming up on time. So last question here. What can we expect to see in the second half of the year from you and your team at Polygon?
Primarily more global reach. So, from a regulated standpoint, we're really starting in the US. This is just a lot of like dollar-based stable coins means there's a lot of ramping in the US, more penetration, in Asia, more penetration in Europe, more services available there. We're really integrating Trails, which was one of the products that we acquired from Sequence more deeply. Trails is this kind of like Google Maps of money movement online, right? It's like, I know where I'm going. I don't know how to get there. Trails will find the best way there. We're integrating that at the orchestration layer for OMS. So you can have an intent. You can just say, hey, I want to end up, over here in like this obscure chain and obscure coin, and I'm going to start with dollars, or I'm going to start with like, pesos. And Trails will do that for you.
Okay.
Trails will map it out, make sure it happens, and it will happen without you having to go to that specific interface. So ease of use, global access, costs continuing to be pressed down as we get better at this, and then increased in better programmability, which is really what you get from this API being built, all in H2. Our goal really is to be the fastest growing fintech in history. And we think we can do it, mostly thanks to our blockchain roots. And then that will enable us to turn everyone else building fintech apps into the fastest growing apps as well.
Nice. Super exciting stuff. John, thank you so much for being here.
Thank you for having me.